Welcome to the StockMentor.com studios. I'm your stock mentor, Brian Johnson. Markets finished up for the day. Actually, they gapped down and did nothing but run up all day long. So, as you can see from the Dow, we had what looks like a break through the blue line, but let's go to the diamonds and give you a better idea of exactly what we saw this morning, and that was this. A gap down on the diamonds right to what would be the 100 mark. That usually works as very strong support. It did in this case, and everything ran up the rest of the day, right into, for the diamonds, the 50 period moving average. Very curious how that all worked out today, but if we look at it on the Dow chart, you can see it just shows it as a big red candle to start the day. So not as accurate. A good trade would have been, short below maybe 10-100, but we didn't get a run through 10-100 this morning. We got a gap down below it. That is not a trade for me. It's not a trade for me. Ran up most of the day, and as you can see, never hit my entries based off yesterday's charts. My entry was below 10,000 to the short side. We hit 10,008. My more aggressive trade was above 10,250, and at the end of the day, we hit a high of 10,236. So still, no trade there. My more aggressive entry is still above 10,250 going into tomorrow, but ultimately more conservative, 10,400 definitely to the upside. There were opportunities to trade if you're a day trader or know what you're doing within day trading. You absolutely could have made some trades today based on the action that we saw. No question about it. But for my more conservative viewers, it was below 10,000 or above 10,400. We can get any of that today. So market's still kind of wandering around looking for what might be the bottom. Now, what do we see here? Well, this looks like, like I said, a 1, 2, 3. Maybe this is some sort of a 4 down. Now, it does look like a 5 wave. I know people are going to write me about it, so let me cut you off and say, yes, it does look like a 1, 2, 3, 4, 5 down. That would mean that we get a correction and maybe roll over and start to move back down again. I'm not real convinced of this being a 5 down yet, even though it looks exactly like a 5 down. I know that sounds a little crazy to you, but this move to the downside here, came right back into some support right around in this area where it did hold. That 10,000 area held very nicely, and we started to move back up again and over this blue line. So coming into tomorrow, what can we look to see based on a daily? So looking here on a daily, you can see we are still bouncing around within kind of this moving averages area. The move up, the pullback. Now this Friday, like I said, heavy volume on this particular day. Obviously noticeable down here. But since we've turned around and started heading back, the volume was a little bit higher than what we had seen yesterday. So we might and are seeing a little bit of a pickup in the volume the last couple days. Overall, what do we have? Guys, it's just really chop. I mean, really, it's just kind of sideways action. This is about the time most people start to lose money in their trading, kind of get their hand slapped a few times. If that's you right now, don't necessarily feel bad. You're not the only one out there. It's very, very difficult trading in these times. Once again, on a daily, still waiting for that break, kind of up here above that 10,400. Once again, below 10,000 to the downside. So, do we continue up, break up to new highs? Do we break down? Honestly, guys, there's nothing in here giving me any real direction. There are some bullish engulfings patterns on some of the other charts, but they just are what they are. You got to take the candles in the context that they are. And right here, it's just chop. Wait for those more major levels to be broken. You can see how important that is. 10 below 10,000 or above 10,400 for those of you playing along at home. NASDAQ was strong today as well, up 1.18% for the day. Bouncing off the blue line nicely and continuing its run up from that point. Back to 1840-ish. We talked about that move. Remember that? 1840 was one of the areas. 1830, then 1840, then 1860. Okay, so all of these are in play now. If you took the break above 1830, you're able to make maybe 8-10 points off that move. Holding on to that blue line nicely, that is one of the areas to be watching on a break to the downside. This is where it's running into problems, and that is the meeting of the 200 and the 50, all in the same place. Once again, a big white candle on the day, and a pretty decent move by the NASDAQ overall. From a weekly standpoint, pushing that blue line as well, so you can see where all the overhead resistance is getting us to. SPX on a 60-minute also just able to pop its head above 1080. Well, that was kind of a more conservative or more aggressive, entry for me. The more conservative was above basically 1090 ultimately, and then above 1100. We did not reach those levels today. You can see we reached about 1084, and that was as high as we got. So once again, 1080 to 1085, still your overhead resistance area. Below 1060 to the short side, above 1090 or above 1100 if you're looking to go long in the market. So what are we seeing here? I don't know. Is this a 3 up? Maybe this is a 4 sideways with an A, B, C type of a correction. Who knows what we've got in here? Point being, we're just waiting for these more major levels to be broke. We get a break above 1100, guys. I really think the bears are going to cover. The bulls are going to take over. We're going to see a run. If we get back below 1060, I think there's a good opportunity to get back into the 1045 area at least. From a daily, you can also see what it's been doing here. Big run up today, coming right back towards that 50-day moving average, which is at 1088 today, 1088.50. So you want to be watching that on your charts as we proceed into tomorrow's trading. Is this a little pullback here, a little bullish look here, or are we about to turn around and do a wave 3 down? Anybody's guess, guys. Let those levels be broken. Don't let your bias control it, and don't just guess at this thing. That's not how we do it in the professional trading world. We don't guess at things. You got to stack the odds, and that's how we do it. All right, from a weekly, coming back up here to the blue line, also going to be pushing the 50-week here if we can get up any too much higher than where we're at, and that 50-week is at 1095. So break above 1090s, my entry to the long side. You'll want to keep your eye on 1095 and then ultimately 1100 beyond that. VIX on a daily big time down day, down almost 8% on the VIX, so it also verifying what we saw in the markets. With the move up in the markets, the VIX moved down. That is confirming. All right. And as of right now, from a weekly basis, we're still just chopping sideways. Anything kind of, we get much below this 23 area on the VIX. Why not? Right back into this area, and that would mean more upwards pressure for the markets. Apple on a 60 had a great run today. From the time it opened, a little bit of a hammer candle to start the day, and then it started slowly grinding its way upwards. Made for a pretty decent trade by the end of it all, up $6. It looks this way on the daily, and you can see the bullish engulfing pattern here. So looking for confirmation of that. The more conservative traders, you want to be watching this 256-ish area, somewhere up in there, maybe 257 for the more conservative, before you start looking to really get long this, before you start getting long Apple again. But once again, keep in mind that we are just waiting for earnings. Apple could end up chopping around until all of that happens. The volatility will also start to pick up in Apple as we close in on earnings. From a weekly, what is it trying to hold? Yeah, the 20-week moving average. We've seen it hit once, hit twice, hit 3 times, a lady, only to see it trying to hold this week. We'll see if it can actually close above this level. That would be a big hold by the bulls. Any blast to the upside, it's this little blue line I keep talking about. FAS on a 60-minute, gap down, run all the way back up. Gee, looks just like the markets, go figure. Once we got back up and above some of these areas here, made for some okay trading, but hard to get in when you see such a big gap down. And then where do you get in here? If you played it from the beginning of the day, you did fine. There were opportunities there for sure. Back above the $20 area or $20.25 area, certainly areas to get in, and back above $20.50 was good for a few pennies by the end of the day. I think at this point it still wants to run upwards and can make as much as 2160, 2170 before you'd want to start to get a little bit cautious about the long side on the FAS for the time being. Here's another one of those bullish engulfing patterns coming right back up to test or want to test the 20-day moving average, which is at $21.11. Keep that in mind for tomorrow based on where we open and what we do. We start to head up from where we're at right now. That would be my first place of major overhead resistance to watch. Anything beyond that, guys, could be 23. This could make for a good trade up and over about $21.25 or $21.50 if you want to be more conservative. Could make for some good trading there. FAZ on a 60-minute, then crashing. Once it got below the 200-period moving average, that was your place to get short, taking us right back into what I believe will be the $15 area. If you did hold overnight, I'd say shame on you, but at the same time, I don't think you're all that. I don't think you're in that much of trouble. Won't know till the morning, but if we open anywhere around this area, I would be looking at the $15 for your target, or at least first target, or to move your stops down into that area. Look at what we did. Big gap up, run all the way back down. It does not want to hold this blue line. Right back to the 50-day moving average, which of course is going to cause problems coming into tomorrow if we stay above that and don't gap below it in the morning. So be watching that carefully for all of you playing FAS, FAZ. Once again, we're chopping sideways. These are meant to be played on a daily basis, not a swing basis. Still evident as we've seen over the last few months. That's it, guys. Wait for those more major levels to be broke. That's where your safest trading is, and see you tomorrow. Bye.